Hey guys, I know I don't typically post on the weekends, but I had somebody asking how I determine my opening range breakout or my bias or whatever it may be, and I said that I don't trade that. I actually trade open high low close and open low high close, as well as some quarterly theory that I also use. So I'm gonna go over that today, how I determine my bias. I'm gonna go over the three trades that I took this week, one of which I lost, two of which I won, and go over why I lost the first one and why I took the second two. Before I go any farther, I do want to point out I do use a lot of ICT concepts. So if you want to learn them from the guy that actually developed them, go watch ICT on YouTube at Inner Circle Trader. And I'm currently I get mentored by a guy named Saint Fearing and a guy named Halo through their mentorship. So if you guys like them, please go check them out on X. You can find everything on their WAP and whatnot. Some of it's free, some of it's paid for, but enjoy. All right, let's go ahead and get started. For starters, I have a bunch of indicators up here because these are all the ones I've made except for this one. This one is by, you guys can just get this one. It's by Fadi, or Fatty or whatever it's called. I have no idea how that's pronounced. So I use this. This is another guy's. It just gives me these high time frame candles because what I like to trade is the 4-hour PF3. So you guys can get this if you guys like. The other thing that I like to use a lot is this ICT high time frame market structure. It gives me the market structure that we're currently in for the daily 4-hour and 1 hour and defines whether or not we have alignment. Before we go any farther, I want to go ahead and determine what open high low close looks like and what open high low close looks like. So open high low close looks like this. You open and then you go high and then you make a low and then you close. That itself looks, one moment. That itself looks a lot like if you go ahead and do this and you go on the 4-hour. I mean, you can really go on any time frame to do this, but that looks a lot like these candles right in here, where we have something like this. This candle, this black one right here, we have an open at this little line, and then we have a high right up here. That's what this is. And then we go down, take out some other kind of liquidity, and then we go back up and we close. That's open high low close. That is the basis for open high low close. And then the opposite is also true for open low high close. Open low high close is the same thing, except we open here, we go down, make a low, and then we work our way up to make a high, and then we come back down and retrace a little for a close. And I'm sure you can imagine what that looks like, but just for reference so that nobody gets mad, that looks like this candle right here, where we have an open, there's a little low made right there, and then a high, and then a close. Or this one right here, open, low is that little thing right down there, and then we come up here, make a high, and then we close. That's open, high, low, close. Now, why this is relevant, just so that we don't lose track of what we're doing here, is that when we have these, well, the important thing is that each candle is going to look like that. So it's important to determine our bias, and then on top of our bias, it's important to determine whether we're going to be an open high low close or an open low high close. So let's go ahead and look at Tuesday's price action, because Tuesday was a great example of we completely sold off. Where we had this day, if you look at this on the daily, it was a perfect example of open high low close. Let's go ahead and turn into this. This is Tuesday right here. Open, high, makes a low, and then we retrace to a close. That is exactly how it worked. Fairly straightforward. There wasn't a whole lot else to go off of for that. But that's our open high low close and our open low high close. That's the structure that I want us to think of. That's important. The other thing that we need to work through is, let's go to the 5-minute. Each day, in terms of quarterly theory, is defined as so. It starts at 6 p.m. of the previous day. This is a Friday, actually, so let's go ahead and do this for a Thursday so it's more applicable. Just for the record, I typically trade Tuesdays, Wednesdays, and Thursdays. That's why I'm marking out a Thursday at the moment. But it starts at 6 p.m. the previous day, and then it's in 6-hour chunks. So I actually have that with this indicator. So it's going to go to midnight right here. And then we're going to go ahead and take it to 6 right here. And then we're going to take it to 12. And then we're going to take it to 6 of that day. And the reason that it's slightly off here is that sorry, no, never mind. But our days in 4 quarters, 6 hour quarters, 24-hour day, split up into quarters is 6 hours. Great. So we've defined that. There are two ways in which a Monday, Tuesday, Wednesday, or Thursday can form, and that is X AMD or AMD X. I got both of those from a guy named Day. If you guys want to go watch it, watch his quarter theory intro. It's like the only video he has on YouTube, but it's really good. It's like really great for intro to quarter theory. The two are X, AMD, or AMD X. Now, X stands for expansion or reversal, and AMD stands for accumulation, manipulation, and distribution. That's what those two things stand for. So when we look at this day right here, it may not jump out at you at this very moment, but it's become more straightforward for me. It's in a lot of the days this week were XAMDs. So we have this downward trend right here, and then we come to the first quarter of the day, and we have a reversal. That means we're going to have an XAMD. Now, that means our second quarter is accumulation because we go XAMD. This means this must be manipulation, and then this must be our distribution. So let's go ahead and take our bar replay and come back to 9:55. Now, what I do when I'm looking at this is I typically trade off of an idea called a 4-hour PO3. And that is, all that means is that I'm going to look at the 4-hour, I'm going to look at the 4-hour candle at 10 a.m. and I'm going to try to find the open high-low close or the open low-high close like we talked about earlier. The one that I trade starts at 10 a.m. And if we remember, this is an XAMD day, which means that XAM, we are in our manipulation phase. You will typically be in manipulation or distribution will be this third quarter, this New York AM session. So our job in this situation is to determine where manipulation is going to happen. The way that I like to do this is I like to be on here and I like to determine, okay, well, if we're looking at I think we were looking at Thursday's price action right here. We want to determine, okay, high time frame SMT, something that gets manipulated on one indice and doesn't get manipulated on the other. And that was this high right here, this high to this high, or this high in here to this high, or this high right here to this high. This one made a lower low, and this one made a higher high. So it's important in this scenario to say, okay, this is our buy side liquidity. This is going to be our manipulation. And just for the record, buy-side liquidity, sell-side liquidity, fair value gaps, and order blocks are all the types of manipulation that I'm willing to look at. Now, the direction of manipulation, how I determine the direction I'm looking at, is based off this high time frame market structure indicator that I have. There's no settings for it. It's really straightforward. You literally just open it and you can turn the table on and off. It's pretty straightforward. If you have any questions, please ask, but that is the basis of it. It says that the daily is bearish and the 4 hours bearish. And we can go and check this to just make sure it's right. But we have a low right here that got closed below. That makes it bearish. And the 4 hour, we have we have a low right here that gets closed below and we haven't closed above a high. Therefore, it's bearish. So I'd be looking for manipulation on the upside so that we can reverse and go to the downside to take out liquidity. And that's exactly what happens. And I only know that because I traded this day. But what I look for here is we've now manipulated this key level. From here, I want to see us find an entry. Now, there are two entries that I have done throughout the past couple months, one of which I started doing recently is a 1-minute change in state of delivery. The second one is a 15-second market structure shift followed by a 15-second retracement of some variety, typically to an order block, but we'll go over that in a moment. So let's go ahead and move forward, see where price goes. So what's important right here is I actually wouldn't count this as a change in state of delivery, and that's because this is not a swing high. If this or a swing low, if this low were to come down here and and close out this one, that would make this a change in state of delivery. But because this move right here didn't make swing low, I won't count it as a change in state of delivery. Therefore, it's not manipulation. Therefore, I'm going to wait for it to go higher. And that's why we don't count it as manipulation. Now, what I'm waiting for is this. There was a low time frame SMT. So if we look at MES over here and we just go to the, I guess we can just see it on the 5 minute. No, I guess we can't. We have to look at it on the 1 minute. This will all make sense in a moment. This SMT right over here, right here. There's a higher high made here and a lower high made here between 10:02 and 10:04. But right here between 10:01, 10:02, that's that high, and 10:04, 10:05, that's that high. There's a higher high made. That combination of a high time frame SMT with a low time frame SMT allows me, in my opinion, to drop down to the 15 second. So here we can either decide, no, I want to stick with the 1 minute CISD, or I can drop down to the 15 second and find a entry there. I just stuck to the 1 minute because there was an entry right there. So the reason that we count this as CISD is we made a swing low here and then we made a higher high here, which means that this was not the highest point. This was making this the CISD. I entered on the close of that candle. That was my trade. That's how I entered. Another way you could do this is you could drop down to the 15 second. You could say, okay, we've made this higher high. I'm willing to drop down to the 15 second. We then have a market structure shift right here. Then followed, if we continue this, I would look at this right here where we have EQ right there. That's equilibrium. We have a breaker block right here that we could return to. That's a bearish breaker. We have a rejection block up here we could return to, but that's kind of pushing it in my opinion. I like to look at this and I like to say, okay, I want to see us stay below the highest quarter level, at least in terms of shorts, but I want to see us go above this EQ. Another thing that we have right here is this is not a validated fair value gap in my sense of a fair value gap, but you could use this if you felt inclined. I think the more important thing here is there is a liquidity void. That is not an imbalance. That is a liquidity void. So there's something called volume imbalance and there's a liquidity void. This is a liquidity void. If you really want to know the difference, go watch ICT. So then we wait for it to cross one of those levels and you'll see that it actually perfectly fills that liquidity void. Shocking. It's almost like this works. And then you could just go ahead and enter either on that liquidity void or the bearish breaker, or I guess the bearish breaker block, whatever makes you feel most comfortable. Now, in terms of this open high-low close, I would be looking for an open high-low close because that means a bearish 4-hour candle because we're bearish on both the daily and 4-hour timeframes, and higher timeframes hold higher power. So I would be looking for manipulation to the upside to get this open, this high, and then to make a low and then a close. The last thing that I'd look for on a trade, this is what I did every day of this week, was I'd look for, you see how there's a quarter level right here? This is called micro session true opens. Well, I guess technically that's the end of the first quarter. So this is the micro session true open. This is just micro sessions. It's a 22.5 minute interval in a 90-minute window. I sell this indicator as well. If you would like this, you can see it on my WAP. It's called ICT QT time levels. It's in the QT bundle. And what we're going to see is that our last one was at 9:45. That means our next one is going to be around 10:07. We want to enter within a couple minutes of the quarter. Our quarter happens right here. So let's say we go ahead and sell just a micro and we sell at the close of this candle because we didn't get in here or whatever. We're going to go ahead and put our stops above the last swing high. That gives us a 170 tick stop, which is an $85 loss if we were to lose. Now, what I'm going to aim for is external liquidity. Now, this right here is an SMT. I know this just because I ended up, I was monitoring these charts. But that right there is a SMT with this right here. This is higher low, lower low, lower low, higher low, lower low, higher low. That's an SMT. I then became immediately interested in this low. I wanted to see this low get taken out as that is our external liquidity. And it's, in my opinion, pretty low hanging fruit that we can kind of just take out. It's not that hard. And if we go ahead and we just let price play out, we then see it catapult to the downside. There is some retracement in here. And if you want to know what this retracement is, it's called redistribution in a market maker sell model. So we're now going to move up into this bullish move, and that is distribution within a market maker sell model. And I would have moved I did move my stops to break even here, and I actually ended up getting stopped out. Soon after this, we come up and take out this high. Wait for it, and come on, it's almost there. You got to give it another minute or two. And we go and take out that high. I had put my stops right here and I got stopped out. And then I entered again down here for the same take profit. And I ended up making like, I guess it's like $400. Now, this is a market maker sell model, which I'm not going to go into today because I don't know it as well. But there is this accumulation. We distribute after manipulation of some liquidity, fair value gap order blocks, buy side liquidity, things of that variety, a point of interest. And then we break structure and move to the downside. We redistribute within a range, and then we continue to go down to the downside, redistribute within a range, and then we take out a point of interest, which for me was this low. Keep in mind, I did enter at that quarter or right before, actually within a minute or two of it. And if you just wait, we go ahead and we take out this. I'll go ahead and crank this a little bit. I guess we can go to 10. And this trade played out beautifully. This was the trade that I took yesterday. I re-entered right in here somewhere. And then we go ahead and we take out that take profit. That is exactly how I trade. So if you guys have any further questions, feel free to leave them in the comments below. I'm happy to answer. Happy to get more specific with things, how I define change state of deliveries, market structure shifts, things of that variety, different entry models, different indicators I use. If we go ahead and leave bar replay, for people that trade silver bullet, which is something that I used to do and I still think is very profitable, it's just I've learned to trade in several different ways. Using my silver bullet indicator and the liquidity levels indicator, this becomes very straightforward in terms of, if you look at it this way, we have a London low, and then we have a market structure shift, and that gives you the entry to go up to buy side liquidity. So that was a perfect silver bullet model yesterday that you could have traded. There was a lot of things that I think are very useful with the indicators that I have. If you guys want them, they're in the WAP, which is in the description below. I'm going to go ahead and probably end it right around here. If you guys, like I said, have any questions, please let me know. I love to help out and explain things if necessary. But yeah, that's about it. I'll have a video going over all of these indicators in the WAP and on YouTube by the end of today or tomorrow. Yeah, but I hope you all enjoyed. I'll see you on the next one. Have a good one, guys. Thanks for watching.